Assalamualaikum warahmatullahi wabarakatuh. In this video, we, Group 5, will be presenting about financial analysis based on Financial Report 2024 between two companies. In our groups, there are 4 members that contributing to this project. First is Muhammad Khalis Akif bin Khairul Faizi, and the next one is me, Muhammad Danish Afiq bin Zainal, and next is Muhammad Danish bin Muhammad Rizal, and the last one is Wan Muhammad Amal bin Wan Muhammad. To start, this presentation provides a comparative financial analysis between two companies, Dutch Lady Milk Berhad and Farmfresh Berhad. These two companies is a companies that is listed in Bursa Malaysia, and also these two are two leading companies in dairy industry companies in Malaysia. Using financial ratios across 4 key categories of liquidity, profitability, efficiency, and leverage, this analysis aims to assess the financial performance and investment potential of both companies based on their financial reports in 2024. The goal is to identify which company present a more attractive opportunity from an investor perspective, based on their financial strength, market positioning, and growth strategies. This calculation will help investors to determine which company will help them give more profit and reduce more risk. Farmfresh was founded in 2009 by Loy Tuan Lee in Larkin, Johor Bahru. To kickstart the company, he bought a land and imported 60 Holstein Jersey cows from Australia, establishing Malaysia's very first grass-to-grass fresh milk production concept. The company originally operated out of a small office also in Larkin. Farmfresh quickly built an excellent reputation by offering the fresh dairy products that are free from preservative and additive, directly appealing to Malaysia's growing base of health-conscious consumers. Its growth was further supported by strategic investment from Khazanah Nasional Berhad, which helped Farmfresh ramp up its production capabilities and expand its product range. Today, Farmfresh owns and manages 7 farms and 4 processing facilities across Malaysia and Australia. They offer a diverse range of more than 190 SKU, including fresh milk, flavor milk, plant-based milk like almond and tongkat ali, as well as ice cream. These products are marketed under brands such as Farmfresh, Yara Farm, Master Barista, Nubian Goat's Milk, Saint David Dairy, and Inside Scoop. A key part of Farmfresh strategy is their innovative home dealer network. This means Farmfresh hires local individuals to become small-scale resellers. These resellers purchase products at distributor prices and then sell or deliver them directly to customers in their communities. Today, this network includes over 1,700 micro-entrepreneurs reaching deep into rural Malaysia and providing extra income opportunities. Beyond Malaysia, Farmfresh products are also distributed in Singapore and Australia with plans to expand soon into the Philippines. Throughout this journey, Farmfresh has stayed committed to sustainability, focusing on regenerative culture, renewable energy, rural employment. All of these is tied to their vision to be a sustainable and honest food company that places consumer well-being first, building strong brand love throughout Malaysia and beyond. Dutch Lady is currently one of Malaysia's oldest and arguably most recognized dairy companies. It was incorporated back in 1963, originally under the name Pacific Milk Industries. At that time, it made history by launching Malaysia's first locally produced sweetened condensed milk, and it also became the first milk company to be listed on a local stock exchange. Later, in 1984, Pacific Milk Industry rebranded itself to the name we know today Dutch Lady. Fast forward to today, Dutch Lady stands out as one of the key players in Malaysia's consumer products. Industry trusted across multiple generations. They offer a wide range of products including milk, yogurt and various dairy-based beverages and continue to innovate with products like Dutch Lady, Lady Max Grow and Juicy Milk. Another major strength is that Dutch Lady benefits from advanced technology and global best practices of its parent company, Royal Friesland Campina. It is a well-known dairy cooperative based in the Netherlands. Most recent in 2024, Dutch Lady completed a major milestone by opening a new 540 million halal manufacturing facility in Banda Instead, equipped with 8 production lanes and integrated with Industry 4.0 technology. This new plant not only replaced their old factory in Petaling Jaya, which had been operating since 1965, but also shows their long-term commitment to strengthening Malaysia's dairy sector. By increasing local raw milk production and helping industry address the triple burden of malnutrition in different communities. This significant investment also highlight Dutch Lady roles in building strong public-private partnership to support the country food security and economic growth.
Alright, for this slide, we are comparing the liquidity position of two companies, Dutch Lady Milk Industries Berhad and Farm Fresh Berhad. Let's start with the current ratio. This ratio tells us how well a company can cover its short-term liabilities with its current asset. For Dutch Lady, the current ratio is 0.8384 to 1, which means for every 1 ringgit of current liability, they only have 84 cents of current assets. On the other hand, FarmFresh has a very strong current ratio of 4.0077 to 1. This means they have 4 ringgit and 1 cents of current assets for every 1 ringgit of liability. Next, the quick ratio, which excludes inventory and focus on more liquid assets like receivables and cash. The shady quick ratio is 0.3627 to 1, meaning they only have 36 cents of liquid assets for every 1 ringgit of current liability. Farm fresh quick ratio is 3.4631 to 1, which means they have 3 ringgit and 46 cents in liquid asset per 1 ringgit of liability.
Now I will present about profitability ratio. First, we look at the gross profit margin ratio. Dutch Lady has a gross profit margin of 33.77%, which means for every 1 ringgit of sales, the company is able to generate 34 cents gross profit. Meanwhile, for Farm Fresh has a gross profit margin of 23.57%, which means for every 1 ringgit of sales, the company is able to generate 24 cents gross profit. Next, we look at the net profit margin ratio. Dutch Lady net profit margin stands at 6.69%, which indicates 7 cents of net profit for every 1 ringgit of sales. For Farm Fresh, net profit margin is 6.93%, which means they generate 7 cents net profit for every 1 ringgit of sales. Now we look at the return on asset ratio. For Dutch Lady, they achieve a 9% of ROA, which means for every 1 ringgit of asset, they generate 9 cents of operating profit. Meanwhile, for Farm Fresh Berhad, they achieve 7.7% of ROA, which means for every 1 ringgit of asset, they generate 8 cents of operating profit. Now we look at the return on capital employed. For Dutch Lady, they achieved 21.8% of ROCE, which means they generate 22 cents for every 1 ringgit of asset utilized. Meanwhile, for FarmFresh, they achieve 14.73% of ROCE, which means they generate 15 cents for every 1 ringgit of asset utilized.
Now, let's look at the efficiency ratios of both companies, which measure how effectively they use their resources. First, we have the inventory turnover ratio. The Shady has a turnover of 4.006, meaning they have replaced their average inventory 4 times in a year. Farm fresh ratio is 3.7529, which is slightly lower but still close, also around 4 times. Next, the average collection period, which indicates how quickly companies collect payments from their customers. Dash Lady takes about 31 days to collect receivables. Meanwhile, FarmFresh takes around 62 days, which is twice as long. Lastly, the total asset turnover ratio. The Shady records a ratio of 1.3458, meaning for every 1 ringgit of total assets, it generates 1.1 ringgit and 35 cents in sales. FarmFresh is slightly lower at 0.3897, meaning it only generates 39 cents of sales per 1 ringgit of assets.
Now let's look at the leverage ratio, which shows how much a company depends on debt to finance its assets. Starting with that ratio, Dash Lady has 53.26% of its total assets financed by debts, while FarmFresh debt ratio is slightly lower at 45.62%. This indicates that Dash Lady relies more on borrowed funds, which may expose it to higher financial risk during economic downturn. Looking at the debt to equity ratio, Dutch Lady ratio stand at 113.94%, meaning the contribution of creditors is only slightly higher than that of investors. On the other hand, Farm Fresh has a lower ratio of 83.89%, suggesting a more balanced capital structure with less reliance on debt. Lastly, for the times interest earned, Dutch Lady is able to meet its interest payment nearly 20 times, showing strong capacity to cover its debt obligations. In contrast, Farm Fresh can only cover it about 2 times, which is a much tighter margin and indicates a weaker cushion against interest expenses. Now I will be making a comparison between Dutch Lady and also Farm Fresh based on four key financial criteria, which are liquidity, profitability, efficiency, and also leverage. Liquidity, short-term financial health. Farm Fresh shows significantly stronger liquidity, indicating a solid ability to meet short-term obligations without financial strain. Second, profitability, earning power. Dutch Lady leads in gross profit, return on asset, and return on capital employed, reflecting stronger cost control and return on resources. Farm Fresh slightly outperforms in net profit margin. In terms of efficiency, Dutch Lady demonstrates better operational efficiency through higher asset turnover and also faster collection of receivables. Fourth, leverage, debt usage and risk. Farm Fresh has a lower debt burden and financial risk. Dutch Lady, however, has a stronger ability to service its debts with earning. So, to conclude our analysis in this video, there isn't a clear single winner between these two companies, Dutch Lady or Farm Fresh Berhad. Farm Fresh stand out as its very strong liquidity ratio and lower financial risk, making it better positioned to handle short-term obligation without any stress. Meanwhile, Dutch Lady leads in most profitability and efficiency metrics. They are more effective in turning their resources into a profit and have a strong ability to service debts. In short, if an investor is looking for a short-term safety and liquidity, FundFresh might be a more attractive security. But for those focusing on long-term profitability and operational efficiency, Dash Lady might be the most suitable security for them. At the end of the day, the choice depends on investors or the stakeholders' priorities, which one they want, based on their own preference and their strategy of investment. Okay, now thank you, and I will now end my video with Assalamualaikum warahmatullahi wabarakatuh.